We work with more than 80 food corporations. That means that we can basically ring them and call them. We can reach out to them and ask very clearly, is this a real problem you have? Is this a real solution? Is there a fit here or not? And then through our acceleration programs that we get a strong collaboration with both the researchers and the corporations, we can de-risk the company in a significant way. So we are not scared of being the first ticket. Good. So thanks for having me, Alex. It's a great pleasure to be here today. And also to chat with you. I think that you are very active in the ecosystem, and it's always catch up and see how things are moving. So a little bit about me. I spent over 25 years working in the intersection of emerging technologies and industry transformation, mostly in the telecommunication space, working for large multinational technology companies, and participated in the early days of internet and later in the application of those innovations into multiple sectors. Back in 2016, I co-founded Eatable Adventures with Mila Valcárcel. That is a platform that is composed of several layers. One is acceleration. The other one is an innovation partnership for food corporations, and also a venture capital arm that we articulated through Cellular Agriculture. So in summary, we activate the strategy, capital, and execution across the food system to turn new amazing innovations into real world impact.
Okay, amazing. Well, you have an incredible education. You've built so much around different emerging industries, and then you decided to go into food. So we're very grateful to have A-stars be part of the community. I've been actually a huge fan of yours. I've followed a lot of development in my previous company, California Culture. I think we were actually involved in one of your accelerators as well. So yeah, it's quite exciting to be speaking with you. Can you just give us a sense of what are you guys doing today? And this is being recorded April 17th, Friday, 2026. AI has still not taken over entirely the world, so we're not in a singularity just yet. So if you're listening to this, we're still alive and kicking. So what is, as of today, the programs and the services you provide to the ecosystem?
Well, we have 3 layers. As I mentioned, the investment part is managed through Accelera, that is a venture funds manager, vertically dedicated to AgriFood. What we think is a major advantage. The focus of the verticality is helping startups and LPs a lot. The other part is Eatable Adventures. We are basically running as a number of acceleration programs. Last year, we did 12 programs, both internal for our own investment needs as well as for third parties. We work with more than 80 food corporations, helping them to find out innovation through specific challenges and open innovation programs that seek to identify the best companies for them. The way that we work is through call for programs in most of these activities. So you will see a lot of activity in networks from our side, announcing programs, announcing new activities. And that is the way that we interact with entrepreneurs. And this is the way to start working in the Eatable Adventures ecosystem.
Amazing. So let's actually break down each one of those to just open up each one of these little delicious boxes of chocolate here. So the fund, first of all, a very direct question. Is the fund still deploying cash?
Yes. We did the first closing in July 23rd. Our final term for new investments is ending at the end of the year, December 26. We will continue deploying capital in the previous investments, but we are still looking for opportunities. We are right now in the process of incorporating. My expectation is that this year we will be incorporating 12 new companies to the portfolio, and we will be finishing the portfolio with 40 companies.
Okay. Check size, stage, geography, mission. Just take us through who. If I'm listening to this podcast right now, and Jose is saying, "Hey, this is who I want to talk to. What stage should I be in? Where should I be based? Mm-hmm. What should I be as a founder for me to even consider this being even relevant for the investment side of the value chain?"
In terms of geography, that is, for me, the initial part. Most of our investors are in the Southern European, Spanish, and Latin American territories. So we deploy capital basically in this territory. One of our programs, Raíces, is dedicated to Spanish-speaking founders. So we haven't invested, but we had been in conversations with Spanish founders in the US, Asia, and other territories. Eventually, we may be entering into one of these companies. In terms of check size, we're early stage, pre-seed, seed stages primarily. Our goal is to get between 5 and 10% ownership of the company. We don't want more than 10% of the company, and that is basically the main decision factor when allocating a ticket for the company, and also allocating the enterprise valuation for the company. We are normally between 100K and 300K tickets, and that means that we work with companies that are in between 1 million enterprise value and 3 million enterprise value. In some occasions, we go up to 5 million, but that is very rare.
And we talk about pre-revenue, post-revenue, pre-reg, post-reg.
Pre-revenue. We were very early stage. We like to work when the technology is defined. We can validate that it's working. It's solving a real market need. It's solving a real problem. And in that context, we basically had the mechanisms to reduce risk in several aspects. So in technology, we work with a large number of universities and research institutions that help us understand whether the technology is solid, is grounded, is replicable, is something that we can put in practice. On one side, as I mentioned before, we work with more than 80 food corporations. That means that we can basically ring them and call them. Well, actually, these days it's more WhatsApp than but we can reach out to them and ask very clearly: is this a real problem you have? Is this a real solution? Is there a fit here or not? And then through our acceleration programs, that we get a strong collaboration with both the researchers and the corporations, we can de-risk the company in a significant way. So we are not scared of being the first ticket. We are normally the first ticket. We actually prefer that stage. And that means that we enter in some cases when there are just a couple founders, and the companies in many cases is still at university level or leaving the university, and that is the sweet spot for us.
Great. And then for you guys, would you lead or you only follow?
In the initial ticket, we lead because in many cases there's no other investor.
It's
So
a
we
safe
need to.
price round.
Depends on the territory. In some countries, like for example Spain and Italy, you cannot really use SAFE in the American way. The American standard SAFE is not legally binding or legally valid, to put it in that way. So we cannot really use them. When we invest in companies in Delaware, for example, we have been investing in 3 of those last year. We use a normal SAFE. For us, it's the preferred method. We think it's amazing. It's super fast. In a week, you can deploy capital, and that is perfect.
Okay, that's great. And I think for our listeners, they need to know sometimes what kind of limitations they have when they're reaching out, because it doesn't make sense to reach out to you guys after they already secure a lead, or is it okay to reach out now? So that's perfect. Take us through some of the signals. I mean, you've been in the game for a while. Anyone who's been in the game from 2017, 2016, we'll talk about it's basically you and the Burger Brothers out of Israel. It's kind of the two OGs. I think Andrew maybe was in the game at this point. But it's like you guys you've seen a lot of frogs. You've seen the good times. You've seen other times. So 2 questions that come to mind is, first of all, has the thesis changed actually? If you were raising cash today for a fund, right? And I'm guessing you probably are. Has the thesis changed of what you're looking for today rather than what you were looking for in, say, 22 or 21 or 23?
Well, the thesis has not changed so much for us. One of the biggest benefits of working very deeply with corporations is that you really get to know the problems they have. That is helping us focus in a big way. So we have very limited exposure to the alternative protein space. We didn't enter in the cellular at all because we realize the technical complexities that the technology has and will have for a long period of time. We also were very lucky to understand the real needs food corporations have and the problems they look to resolve, and the technologies that will be valid to fulfill those needs. So our thesis is based on Deep Tech. So we only invest in Deep Tech. We are strong in biotech. More than 50% of our investments has been done in the biotech space. And then we are very strong in artificial intelligence as well. We have been investing in artificial intelligence since 2018 with our previous investments from our own balance sheet. And a large part of the portfolio is now AI based, something like 70%. So it's a meaningful number. We like the convergence. We like startups that bring AI plus physics or like hype sound, or they bring advanced robotics and automation with AI, like Nebula Farms, for example, photonics with blockchain and artificial intelligence, like Aflabox. So we really like the blend of technologies and the convergence. And those are the companies that are performing better in the market. So we actually look for this profile of company. That has an implication. The implication is that the founding team should be also skilled into multiple disciplines and should be wide enough to cover this in a proper way. But that is the focus that we have right now in terms of investment thesis. And that needs to be applied to a real problem. So I always say that
1 second for our founders. I love Jose's. He's very clear about where the trends are and what he's looking for. And I would just say I've seen this we've gone through these, I would say, 3 waves of where we were food tech, then we became climate tech, and I think companies now were called physical AI, right? So that's I love how all the robotics companies that were deploying things or vertical farms, it's again, you're putting a wrapper on something. It's like, wow, I'm doing physical AI. It's like, I think we like 5 years ago you would have been called food tech or agri-food tech, and now 2 years ago it was about the climate. Now it's all about physical AIs. To the founders, it's okay. It's a wrapper. Again, it's a beautiful thing. But what Jose is saying is you better prove your chops on why you're the right founder to actually do, let's call it physical AI solution, how you're multidisciplinary, and if you're in deep tech, like what specifically you have unique knowledge in executing with this technology. So Jose, but please go ahead.
Yeah, so I was saying that this needs to be grounded with solutions for real problems. So we need to get a clear understanding of how those amazing technologies are actually solving a real problem in the food space. And that is basically the way we work. That takes us to a matrix. So the segments plus the technologies create a matrix, and that is how we map opportunities. Being vertical also gives you a strong feeling of where the market is developing, where the market is not developing, and you can find where the space is, and so on. So those are the mechanisms that we follow when we make decisions for investment.
So if I'm hearing some of the signals you're looking at, okay, education, a pretty key one at this point, right? Probably, again, if there's a strong IP or something spinning out of the university that's protected. Any other signals that you would say, hey, this is a good fit? And the obvious is, it sounds like Southern Europe and Spanish-speaking countries. So if you're at the moment in India, probably not the right time to call Jose. Go call Omnivore Capital. Don't call Jose. Why are you talking to me? Anybody else that? Well, actually, not to push back, but it's interesting. When I was at California, we did an accelerator for you guys, right? And California culture did not have any Spanish speaking. I don't think Alan speaks Spanish. Maybe I'm wrong. And also, they didn't. We were a United States company. So how did that fit in?
Well, that was part of a program called Milkubator. That is, I think, is quite an amazing vehicle for the industry. So this is a program we did in conjunction with Pascual, that is one of the leading dairy providers in the country. And the management and the ownership a few years ago had this visionary approach to the market, like, okay, we are okay now, we are doing well, we are incorporating innovations in a continuous way, but we want to be prepared for the future. We want to understand how the future is going to be shaped. And also this family, they have a strong sense of helping the community. So they wanted to help entrepreneurs come to the dairy market and the dairy space. So together we created a Milkubator, that is basically a dairy incubator. We were looking for deep tech applied to the segment, and that is I think the program is in the 4th edition now, and that is where California was one of the companies that was selected.
And that was a global, basically, call.
Correct.
Okay, got it. So that's one accelerator side. Maybe we'll get a chance to come back to it. And that's It was a great program. A question to you, be going back to signals of the fund itself, right? What signals, additional signals should founders be thinking about that would make you say, hey, that's a hell yes for us to come in right?
I think one of them is understanding the problem in a deep way. So getting super deep into the problem and all the potential solutions and nuances that are associated. That is a big one. Execution for us, and especially for me, is super, super important. So velocity is what differentiates one company that is successful from one company that will not make it. And then resilience and adaptability. One thing that you see when you work with companies in the very early stage is how they evolve, how they change every year. It's quite amazing. So you see idealistic approach to a solution to the market, very, very rough ideas that needs to be worked out, documented, explored, etc., etc. Company 3 years after that phase is completely different, and the problems the CEO is suffering are completely different, and it's a different animal. So this is something that we explain to founders in our acceleration programs is how the company is going to be evolved, how their role as a CEO needs to be evolving as well, and that implies people that needs to be comfortable with change. They need to be comfortable with uncertainty, and they need to do this in an environment that is fast moving and fast paced. Those are the three elements.
We'll jump in all there, but the way I see it as a father, because I have 3 kids. My youngest now is like, my gosh, my youngest kids are 10, almost 10. My oldest is almost 15. All right, I had my first kid when I was 23, 23, 24, something like crazy. Wow. A happy anniversary to my wife. Sometimes 15 years already. But what I see is almost like startups are like newborns, right? So the evolution of a newborn is very different from someone who's 97. Obviously you're evolving as a 97-year-old for sure, but your growth pattern is going to look different as a 97-year-old than a child. Like I want the rate of development for my 2 months old to be pretty, like I expect him to change by the time he's 2. Like if he hasn't, that's a concern. But if I'm seeing radical change from 97 to 99, just like you're just a creepy old human being. You should probably just keep going where you're going, right? To make changes at 99, that's what's going on there. So I see it also the same way I see startups, right? The evolution should be similar to a young newborn, right? That's part of the process. But if you mature, like radical evolution is maybe sometimes quite dangerous, right? So do you like that analogy, or you see a little different?
Yeah, I think is very accurate. I think that the teenager phase is also there as well. That you are not in one side and you are not in the other, and that is for us the moment.
The valley of death, I think.
Yeah. For us, the moment where a company is starting to be is grown up, is starting to be more mature, and so on, is the moment to start thinking about exiting. So our role is the creation of companies and the attraction of innovation to this market space. So when the company is shaped out, is created, is growing, has 30 employees and is more solid, is the moment where we are not providing so much values as an investor. Is the moment where we can, in conjunction with the CEO, we start thinking, okay, guys, in next round, if there is possibility, we would like to start getting out. And naturally, we continue supporting the companies even when we leave them, because we want to provide value to the ecosystem. So we are super happy to continue in helping us in any way or form that we can.
Take us through now the behaviors, because you mentioned three elements, right? Which I think are really, really critical elements of the signals that we're talking about. Can you take us through what actions are you actually looking at, right? Because one can say resilience, but resilience is actually just a combination of actions. So take us more from the kind of the general language of the resilience, the change, the evolution, like. And actually, how do you see that in the startup, and what signals are you looking for in behavior? Because a deep tech company, often they're not going to be able to have customer reviews. Right? They can't just put a CPG product out there and have people talk about it from an experience standpoint. What is the measure of action that you're looking at that says these people are actually fast moving and they are actually into evolution, they're self-reflective? I speak with founders raising every day, and they're all telling me the same thing. It's harder than ever to find investors who are actually deploying. And getting access to those leads takes time. Founders just don't have. Every month fundraising is a month burning runway. This is why we created FTW Plus, a community of founders actively fundraising, the world's most accurate agri-food tech investor database, plus connecting you directly to ideal target investors and a community of support and accountability. Guaranteed results or your money back. Apply today at www.joinftw.com/hub.
Well, when you work with a large number of founders, we have 39 companies in portfolio right now. So you average 2 or 3 founders per company, that is over 100. We meet all of them, and we meet every quarter with all of them, and we are very disciplined. We have a strong discipline on meeting and following and chasing. So many of them, when you challenge them about what they do, the way that they are evolving the product or the technology and so on, the reaction is something that is normally very, very interesting. In many cases, they are very proactive and they challenge you as well, and they come back and we have further interactions about why or why not, and what is this other competitor doing and why you are not doing it or why you should be doing, and so on. So that profile where they are open to discuss at a technical level, that is a big signal that they worry about the product and they have a strong willingness to fulfill a mission. In terms of execution, similarly, and this is something that I said to many, many founders, when they are fundraising and they are approaching potential investors and so on, the number of investors they approach is, are you talking to 3 venture capitalists or are you talking to 300 venture capitalists? So that gives you an indication of how they see the evolution of the company, how much they want to put into the future of this venture and so on. And this is a question I make also to the new startups. How many people are just talking about? How many people you have presented this product and so on? Because obviously you can be in love with what you do, but you need to get it completely validated by the industry, by the investors and the academia. So that is in terms of execution, that is the way that we measure those the performance and the signals. Resilience is more associated with the multiple problems that you face when you are creating a company. And in these years, the list of issues that we have seen in the startups is huge. Sometimes a founders calls you with a very, very big problem, and they say, well, I don't know, it's hard to explain. And basically, we already had 3 of those in the past. So you are basically understanding very well what's going on and understanding what is the resolution, and you have a number of options that work or didn't work, but you can put a number of alternatives so then on the table. In this space for us, the footprint that we are working in is also very important because there is a super strong cultural fit. So obviously Spain and Latin America, not only the language, but we share a common culture. So we understand what's going on and we understand the founders. And so what will be difficult in other territories. Italy, similarly, the culture is very similar. So we can have very open, very direct conversations. And for us, this is like working in a virtual country that is helping us to get a strong link with all the ecosystem members.
Amazing. And having that culture within the culture is a really powerful bonding as well. I feel like whenever I've spoken to Italian founders or Spanish founders, there's a lot of directness as well there, which I appreciate. You get to the freaking point fast, which is anybody who spent a lot of time with me, I go fast. My style is fast. Some people like slow, which is both are legitimate. There's not, there's zero saying that one style is better than another, in my opinion. But I go fast. So I appreciate that culture very, very much. Last 2 questions that I think our listeners, it's important for them to get a sense from you. At what point should I be reaching out to you? And what is the process going to look like, right? So I listen to this podcast. I think, gosh, I think I'm actually the right fit for you. What should happen next, right? What's going to happen next? What is the time to you make a decision? For example, if I have, is it a 2 months process? It's a 5 months due diligence process. What should I expect if I'm reaching out to you?
So we work on program basis. So that means that we issue call for projects. And the call for projects for us is more like a marketing event, like a public communication activity and so on. But we are always talking to founders and receiving texts from founders and so on. When we get a new call, we want to know whether 5, 10, 15 companies will be applying and we can work with them and so on. So the formal process starts with the call for projects. And applying to the call for projects, but they can reach out at any moment, either by LinkedIn or email and so on. Any startup can send an email to startups@eatableadventures.com, and there's a team that is taking care of that. And that is the formal part. In terms of a decision, once we get the call for project finished and we start doing the evaluations, etc., we are pretty fast. So we make a decision in 4 weeks. In 4 weeks, we move to term sheets. Term sheets are very standardized and these days. So normally, in a couple of months after the program finishes, we normally have term sheets signed.
And Jose, anything we should know? It's obviously public on the website, but anything we should know about the programs, open calls you're running this year that founders should just be aware of? Or obviously they'll direct it to the website, but anything that you want to talk about, which programs are up and running or you're thinking about launching this year, just so founders can get their thoughts around it?
So we are right now in the investment phase for Food Seed 26 in Italy. So we launched the call for projects in November. We have already selected 8 companies, quite amazing. And we are in the final stages of closing the investment part with them. We will be launching races that is mainly for Spanish-speaking founders in a couple of weeks. So the team is already starting to do scouting and contacting startups and so on. And the formal call for projects will be launched in 2 weeks at the end of the month. We will be launching again Food Rise in the summer timeframe. Food Rise is ending right now. The last year program is ending next week. We are doing a food security week event in Buenos Aires. So it's Food Rise is specifically for South Con and Latin American startups. And it's a program that we're doing in conjunction with IDB, International Development Bank in Washington. So those are the programs that are running right now. We are also operating third-party programs. So we expect that we will be launching, traditionally launch every quarter, an incubation or acceleration program in Madrid for the Innovation Hub. And then we have been running Cajamar, that is also in a call for projects at the moment, through the Cajamar Foundation website. So we normally have 1 or 2 programs going on at the same time.
You got a whole menu of opportunities that people are that willing to participate. Look, I think it's been an extremely valuable conversation. The last question, actually, the last 2 questions that can come to mind. One is, you've been in software, you've been telecom, like these are massive industries that have won big from an investment standpoint. Are you bullish? Like, where are we going as a fund manager? Would you go out and raise another fund today? Or is this so? If you are, one would say, "My God, that's crazy! You're going to raise a fund in a sector that's burned through, $5 billion. Why is this going to happen?" Right? So, can you just, if you may, just why are you bullish, and who's going to give you money to do this?
So we are starting the fundraising process for our second fund. That is going to be a 50 million fund. Hopefully, we would like to have it closed during the year. It's a very harsh climate for fundraising, but the performance that our startups are having is quite amazing. So compared to the international benchmarks, we are, in terms of return, we are something like 25-30% better than the percentile 75%. The reason is because we enter very early, the companies start growing very fast, and obviously that produces a strong return for our investors. So the story that we can tell to investors is very good. We are also an impact vehicle, so 100% of what we do is impact. So we are officially articulate, but 100% of the investment we do needs to have ESG thesis and needs to be part of our ESG thesis. So an impact vehicle that can produce nice returns above market performance, we hope should have potential investors. So we are working on that. Any potential investor interested, we are super welcome to explain what we do in detail. And I think also...
Is there a minimum check for that you would take?
500.
Okay, good. Okay, great.
And I also think that there is a lack of early stage vehicles in this market, and the food market needs innovation to accommodate to the climate change and all the restrictions that is imposing in production. So we think that the emerging innovation is needed in this market, and we also think that it makes sense to create vehicles that continue supporting new startups and growing the market.
And my assumption, tell me if I'm correct, is I think one of the reasons why you're successful is because you're so close to the industry. A lot of the bigger generalist funds, they came with a mentality that their benefit was that they're outside the industry, right? They come and disrupt. So if somebody was in the cab industry, they probably want to bet on Uber, right? So it's very hard to disrupt yourself. But one thing I think we've learned is that the food industry is very monopolistic, right? And then in terms of there's a highly control and heavy efficiency in the food industry, extreme efficiencies. So the fact that you have corporate partners that have a sense of what needed is like, that's a differentiator. Plus, you focus on markets that didn't have crazy valuations like LATAM compared to the United States and maybe Western Europe, right? So you were able to come in and still, on a $500 million exit, you could do very well, while somebody in the United States would never do well on a $500 million exit.
I agree.
Would this, or am I off?
No, you are completely right. The other angle is the quality of education in this territory. So Italy has a strong research institutions. Universities are very, very, very good. Argentina is extremely good in biotech. So we are finding amazing scientists in the region, low wages, low cost of living, and so on, what makes a very good scenario for a startup development. So I think that we have assets that we can put on the table to bring new amazing innovation to this market.
Amazing. Well, I tell you that I fell in love with Argentina. I haven't been yet, but I fell in love after I read 4 Hour Work Week by Tim Ferriss, and he talks about going to learn tango dancing in Buenos Aires. I think there's another reason for you to go. Jose, thank you for this conversation. I think all of our listeners have learned a lot, and they'll be in touch.
Perfect. Very good. Great to speak to you.
One more thing. Don't close this episode yet. If you got value from this conversation, here's what I need from you. A 5-star rating, 1 comment, 20 seconds of your time. That's the deal. A 5-star rating means more founders find this content, and every time a founder raises, all boats are elevated. Every week, I pick 1 random comment and send that person a complimentary copy of Investment Climate, the book. 50 sales playbooks from founders who actually raise money during the fundraising winter. Real strategies, real closes, real numbers, not theory. So if you want a copy, comment below, and if you haven't followed the show yet, do that too. And if there's a guest you want us to bring on the show, just drop us a note or send us an email. We'll read each and every one. Until then, keep on raising.